On today's episode, we are going to put two of the top Chinese giants in the e-commerce market against each other. The first one's going to be JD and the second one's going to be PDD. And we're going to put them against each other to see which one I believe is a better investment for me. So this episode is going to be broken down into the following. I have this point system and we're going to take a look at all these informations from revenue breakdown, revenue growth, to margins, balance sheets for both JD and PDD. And based on the numbers we see, I'm going to give points to the selected company. At the end, I'm going to pick a winner based on the points and give my overall thoughts. And let me just say this, just because one of them is a winner does not mean that the other one is a bad investment. To me, I'm just trying to look at the differences between the two companies to understand more about them. And like always, if you're a long-term investor, if you like to learn about growth stocks, and if you're new to my channel, make sure to hit that subscribe button. To all my returning viewers, thank you so much for the support. It truly means a lot. Like always, if you guys ever want to get in contact with me, you can find me on YouTube comments, on Twitter, on my free Discord, on Twitch, or at josenaharo.com. And remember, everything I say here is just my opinions. I am by no means a professional, so none of this should be taken as advice. Make sure to talk to a financial advisor before making any financial decisions. Let's get started. All right, so like I mentioned, today's episode, we're going to take a look at JD, PDD. Before we go any further, don't forget to hit that thumbs up. Don't forget to subscribe. And let me know in the comments, who do you guys think is going to win today? Is it going to be JD or is it going to be PDD? I feel like a lot of people on my Discord channel are rooting for JD, but I know a lot of people want to get some information on PDD. All right, so the first thing we want to take a look at is revenue breakdown. And revenue breakdown, what we're looking for here is to see how each of the companies is collecting their revenue. I personally like investing in companies that have multiple revenue segments. So let's take a look at the revenue breakdown. And for those that don't know, JD ticker, JD.com, the ticker is JD, and the other ticker is PDD. To my apologies, I'm not 100% sure how to say this stock's name. PINDUODUO. If we take a quick look at their price right now, JD.com is at $75.16, and you can trade this on the NASDAQ. Right now, it has a market cap of about $115 billion. Now, if we take a look at PDD, this one is sitting right now at $73 and $70. And this is a perfect example of why one should not look at stock prices when investing in stocks. What you really want to care about is the market cap, right? The market stock prices for both these companies look the same, but the market cap for PDD is $88.2 billion, where for JD is about $115 billion. So we can see JD right now is about $30 billion more expensive than PDD. So let's go into that revenue breakdown. And the best place to pretty much find anything about revenue breakdown is the company's most recent earnings, and they kind of break it down for you how they collect their money. So the first thing, like I mentioned, both these companies are in the e-commerce world, and they are some of the leading ones in the country, right? Like I mentioned, JD is number 2, and PDD is number 3. So let's take a look first at the revenue breakdown before we understand where that money comes from. So net revenue for JD in this most recent year, and this most recent quarter, which ended June 30th of 2020, was about $49 billion. Out of that $49 billion, most of it comes from JD Retail, which is about close to $47 billion of that $49 billion came from JD Retail. The other $2.3 billion came from new businesses, and we're going to see what these new businesses are. So like you see, JD Retail is the biggest portion. It's over 90% of this company's total revenue breakdown. So, but one thing I also want to show you guys is here they have the two segments compared to same time last year. So in 2019, we can see that, and this is going to be in Chinese yuan, was 260 billion for JD Retails, and right now it's 331 billion. So we see an increase in JD Retail. We're also seeing an increase in new business. Same time last year was about 10 billion Chinese yuan, and this year we're about 16 billion. So we're seeing growth in both of their revenue segments. So let's take a quick look at what this new business is. New businesses for the company includes their logistics service provided to third parties, overseas business, technology initiatives, as well as asset management services to logistic properties, investors, and sales of developments, properties by JD. So the first one is JD Retail. And like we saw, JD Retail makes up about over 90, maybe even over 95% of this company's total revenue. So the first cool thing I want to mention is in the second quarter, live streaming became very popular, a very popular tool for JD Retail. And this is when either sellers or some marketers go online on JD.com or on any of their other platforms and live stream products. And then while you're looking at that product, you can purchase that product during the live stream. Second thing, in April, JD Retail launched instant delivery, which is services for mobile products with delivery of mobile phones in as fast as 1 hour. And these are some of the news from their most recent earnings, which were about 2-3 months ago. And the other one is JD Retail continues to apply advanced technology. And I think this is one cool thing about JD is they're always focusing on ways to improve, to use new technology to improve the sales, following the launch of its AR-based virtual shoe try-on. So now what I think is pretty cool, now you can use this AR-based virtual shoe try-on is you look at the shoes you want to buy, you kind of use your phone, and if you put your feet next to the phone in the camera mode, it would show you how the shoe would look on you. They also have another feature that deals with similar things based on your skincare. So it allows users to upload images from their mobile phones for analysis and receive customized shopping guidance on suitable skincare and cosmetic products. So we can see this is where a huge segment of this company's revenue comes from. They also have JD Health. JD Health, pretty much the biggest aspect of this product is, if you guys know Teladoc, it would be more of a Teladoc style for China. But remember, JD Health now would be considered in that new revenue and new business revenue. So this new business revenue and everything else I'm going to talk about here makes up less than 5% of the total revenue. But remember, these are probably markets that might be able to grow in the upcoming years. We saw compared to the same time last year, they were growing, but it did seem like that retail is still growing at crazy levels. The next thing is JD Logistics, and this is services when, for example, JD Logistics launched a new Asia #1 warehouse in Langfang, and it's equipped with the first automated storage and retrieval system for bulky items in Asia e-commerce industry. And this is greatly improving efficiency in handling items, including like air conditions, refrigerators, and furniture. So JD Logistics is their segment where it helps warehouses improve their overall efficiency. As of June 30th, over 750 warehouses are operated by JD Logistics. Again, another business that seems like it will continue to grow as warehouses get bigger. But to me, I'm a little bit more bullish on that JD Health. Another thing is JD has some form of asset management thing where they buy into shares into other companies. One of the biggest one they did is Data Group. And Data just recently went IPO. You can find it on the NASDAQ on ticker DADA. June 5th, 2020 was its initial IPO. As of June 30th of 2020, JD is the largest shareholder of Data with about 47.9% stake. So right now, this relationship that they have with Data is because this is more like a local on-demand delivery system, and because of the retail capability support of JD.com, these two can mix together and create more like an omni-channel strategy, bringing consumers the most convenient and advanced shopping experience because they can do the shopping and then the extreme local delivery as well. All right, so now we took a look at JDD again, but remember, we saw that a huge portion of that revenue is coming from retail. Now let's take a look at PINDUODUO. Right now, they made total revenue in their most recent quarter of about $1.7 billion. So we can see these two companies are in way different leagues, where PDD made $1.7 billion this recent quarter. JD made about $49 billion. So about 40 times larger. JD sells about 40 times more products than PDD. So a lot of people are really wondering why this valuation is the way it is, and that's probably something we'll talk about, right? Because if they're selling a lot more than PDD, but their valuation is not that much far apart from each other, it's definitely a red flag somewhere. So out of that $1.7 billion of revenue, the revenue segment is broken down into the following. The first is revenues from their online marketing services, and this makes $1.5 billion. The next is revenues from their transaction services, and this is $161 million. So we can see a huge portion, very similar to JD, of this product, of this company's revenue comes from retail. And let me explain one thing about PDD. PDD is a little bit more than just e-commerce. What they consider it is more of a social e-commerce, and their model for selling products is a bit different. When you use their applications, how they use their applications is, this is directly from consumer to the manufacturer. So there's no middleman in between here when you're purchasing from PDD. So let's say if you want to buy a Samsung TV, it's between you and Samsung TV. There's like no Best Buy, no other seller in between. So what's the difference here? Because you don't have that middleman, it helps a lot with cost, with the overall cost of running the business. So a lot of manufacturers are using this platform for that reason. It's cutting off that middleman. The other thing they do is they try to do it with the social aspect in it. With PDD, let's say I wanted to buy a new computer, a new laptop, for example. But I didn't want to pay full price. One thing I can do is I can create a team with different people that are looking at this same computer, and with more people buying the product, the more people, the better savings I would get. And how does this help out? Imagine, let's say you want to buy a TV, then your cousin wants to buy a TV. So you'll send him the app, you'll send him the link of the app, and then he'll join you to do that. But then the next time he wants to buy something, he'll talk to his friend about buying a new product. And if they group up together with other members, they might get a savings. So now my cousin will send that app to other people, and then those other people will send it to so on and so forth. That's why this company is seeing crazy amount of growth, because of this huge social aspect that they're using to leverage it. So now that we understand both businesses and we understand the revenue segments, let's take a look at the first point. The first point is going to be on revenue breakdown. Right now, both of them kind of make their money through the same form of revenues. The only thing that's different is JD right now is hitting a little bit more markets than PDD. The only thing is, even though JD is hitting a little bit more markets than PDD, it's still such a small portion compared to percentage-wise of the breakdown. So here, I originally thought I was going to give a point to JDD on this one, but because over 90% of the revenue for both these companies come from the same segment, which is e-commerce, and the rest come from the other sub 10% come from a different product, the revenue breakdown is pretty much very similar. So I'm going to give 1 point to each of them. The second point we're going to take a look at is future growth. So in future growth, what we're looking for is to see which company is expected to grow faster within the upcoming years. So first, let's start off with JDD. JDD in the next 3 years is expected to grow its revenue 15.8% annually on average. This doesn't mean every year is going to grow 15%. Maybe next year might be 20%. The year after that will be 15%. And then the year after that will be 10%. But within there, you see the average between those three is actually 15%. So now let's take a look at PDD. PDD is expected to grow its revenues 28.1%. So here we can see annually for the next 3 years on average. So here we can see that PDD gets the point on future growth. And you might be like, Jose, but and this is something we have to keep in note of. Right now, this is the point system, and there's certain points that help companies that are growing. But later on, we're also going to see that are going to be points that help companies that are kind of stable right now. So PDD is a much smaller company compared to JD in form of revenue sales. So it is, I did expect this one to beat the future growth, because JDD already does 40 times more sales than PDD. So I wasn't expecting its sales to grow that much more faster than PDD. percentage wise. Next, what I want to take a look at is revenue growth. And revenue growth is a little bit different from future growth. Revenue growth, I'm taking a look at historical growth for both these companies in the past 3 years and see how they are improving. Again, both these companies have shown strong results in numbers, right? We see the type of products, values they're working with, and the e-commerce segment is really well. So right now, I'm not seeing one company that's a bit better than another. We can see they're in different stages though. So let's start off with JD. So JD in 2019 grew its revenue 23%. In 2018, it grew 22%, and in 2017, it grew 47.2%. These are some strong growth numbers, right? This to me is still a growth stock. Now let's take a look at PDD. PDD in 2019 grew 126%. 2018 was 620%, and in 2017 was 262%. So this one is growing a lot faster numerically wise. But remember, we are seeing that they are in different stages right now. So here, this other point is gonna go on PDD. And remember, future growth was more expecting that future growth of revenue, where revenue growth is looking at historical growth. Now let's take a look at margins growth. Margins growth, and this should actually say just margins. We're not really looking at the growth. We're looking more at the margins and the overall trend of them. So let's start off with JD. So JD, this is to me the perfect example of a growth stocks. We can see profit margins started off negative in 2011, and as years progress, they have uptrend to a positive. And 2019 was the first year they were gap positive. The other thing I'm seeing is gross margins are increasing overall in the trend of things. Right now, their gross margins are 14.6%, and their profit margins are 2.1%. Now let's take a look at PDD. PDD, the first thing I'm seeing is overall in the trend, their gross margins are improving, and they have a lot higher gross margins than JD, right? And this is to be expected, right? Because gross here, PDD, this is pretty much eliminating the middleman, so those gross margins are going to be a lot higher. The other thing is profit margins are kind of ticking up. If we take a look at a line chart, if we look at this trend, it is ticking up, but it's still negative. Again, they are improving, but here profit margins and gross margins, I'm gonna have to give to JD because JD's things have been constantly increasing over time, and now it is improving. And you can see just this overall trend in profit margin as well. Again, PDD does not look half bad. I just like the way the numbers for JD look better. All right, next. Normally, I take a look at cash flow margins, but cash flow margins is very tricky right now for both these companies. I think there is some mistake in past data. I've looked at past data from multiple sources, not just lazyfa.com, and they're giving me some weird numbers for PDD, some things ridiculous that I just don't feel comfortable doing here. So for here, I'm just gonna give 0 points to both because it's not a margin I can really look at right now. The next thing I want to take a look at is the balance sheet. And here in the balance sheet, we have to take account of where the company is at. So first, let's take a look at the balance sheet of JD. I keep saying JDD now. The balance sheet of JD looks as following. They have about 120 Chinese yuan, billion of Chinese yuans compared to a 25 billion of debt. So they have a lot more cash than they do have debt, and that's amazing. The other thing is, because this is a company that's already profitable, I would have been a little more lenient on its balance sheet, opposed to PDD. PDD is not profitable, so I'm gonna be a little more stricter on their balance sheet. Right now, cash and short-term investments for PDD is about $49 billion. They have about $8.3 billion of debt. This is actually another well balance sheet. So from here, both of them have a very, very strong balance sheet. So here, I'm gonna actually give a point to both PDD and JD. Right now, PDD is actually up on JD by 1 point. But next we have 2 more points left over. We have valuation, and I actually already know who valuation is gonna get. So I'm pretty sure this is going to come with the tie, and the overall tiebreaker is going to come with my thoughts. So let's take a look at the valuation. So right now, forward price to sales ratio for the upcoming years for JD is about 0.92 for 2021. For DDD, the price to sales ratio is about 8.24. So the valuation for JD is a lot cheaper than JD, and we're actually going to take a look at why in a minute, right? But overall, right now, valuation seems to be a little bit cheaper on JD. But why? Why are people willing to pay, are paying these dramatic levels for PDD compared to JD? And actually, let me put these zeros because they're kind of driving me crazy. So the first thing we saw is right now, PDD is growing at crazy levels compared to JD, right? It is insane. It's still growing almost at triple digits. The other thing is it came from that margins. Right now, we see that the gross margins for JD are 14.6%. The gross margins for PDD in this most two recent years were closer to 75, 78%. So it seems like this company PDD keeps about 5 times, is it 5, 15, 30? Yep, about 5 times more money than JD. So people are willing to pay more for it. But right now, based on the current valuations, people are paying about 8 times more for it. So they're paying 8 times more. We can see, we can kind of cut off 5 times, right? Let's cut off 5 because obviously PDD right now has better gross margins than JD. The other percentage I feel like investors are paying a higher valuation is because they believe this whole growth, the growth momentum of PDD will continue. So that to me makes sense. But the valuation, I do believe, looks a lot better with JD, even after including those products that we just talked about. So that's why I gave the valuation to JD. Now, my thoughts. I personally really like PDD's growth model. I think the way they're doing their product is pretty cool, especially with this whole social aspect of the e-commerce. JD, what I do like about them is their technological aspect. They're really pushing into these new technology products to help increase their overall application. And they're also hitting different markets. They're hitting the health market. They're making smart asset management by, for example, having huge portion of data. They also have another one called JD Digits, which is a fintech service as well, which I didn't mention. And I wish I would have mentioned that too. But JD is just a little bit more diversified, and it's in markets that I believe are a little bit more, I feel a little more bullish compared to PDD. Even though JD is growing a lot slower than PDD when we took a look at that revenue growth, right now JD is a lot bigger. So even to be that big and growing at that form of growth level is still very impressive. JD just became profitable. PDD is improving its margins, but it's not profitable at the moment. I think here on my thoughts, I'm gonna go with JD and give the point here. And this is actually another close one. I'm pretty happy to do this video. So it was a 5-4, right? And again, this doesn't mean PDD is a bad investment. I do think PDD is a good investment. I actually own both of these companies. PDD to me will be a company that would stay most likely a tier 3 stock for now, where JD right now is starting off as a tier 3, but I could see it very shortly, in a very short of time, becoming more of a tier 2. Where PDD, I would keep it as a tier 3 stock for a longer time period, see how things are developing before moving it to a tier 2 stock. But I do believe, I am going to be honest, none of these will ever be a tier 1 stock in my portfolio. So I hope you guys enjoyed today's episode of Monday Matches on Tuesday. And let me know in the comments, guys, were you surprised with my selection? Would you have chosen PDD? And let me know why. Remember, these, at the end of the day, both of these can be great investment styles. Both of them showed great companies. Both had great growth, great balance sheets. So I personally wouldn't mind investing in either or. But I do believe these videos help other viewers pretty much take a look, kind of get aspects of some type of metrics they can look at when valuing a company and trying to understand why they differ from each other, right? We saw why they differ from each other because both these companies are in different stages of one another. So that's another important thing that we should take a look at and try to learn as investors when looking at companies. So take care, guys. Have a good night and see you next time.